You're most welcome. We call her Madam Teacher, so please, get ready to learn a lot from her. And then we also have Mr. Stephen Birungi. He is a market analyst with the Financial Markets Department at Bank of Uganda. Stephen, you're most welcome. So,
thank you, Salma. Before we go any further, I request that we kindly first run the poll to get to understand the kind of people we are speaking to this morning. So please kindly put the poll up so that we understand the kind of audience we have today. So we are giving it 1 second, then we shall get the results out. Patricia. Okay, thank you so much for participating in the poll. So from the poll results today, we have no audience member that is below 20 years of age. 21% of participants are between the age of 20 to 30, 31 to 40, we have 33%, 41 to 50, 33%, and then above 50, we have 12%. So we assume in the category of people maybe that qualify for midterm, percentage is 33%, then the 12% of above 50. So gender participation, 54% are male and 46% are female. But we also need to understand why government securities. So we also set out another poll. Please kindly also post a poll so that we get to understand if members have ever invested in government securities, or what is limiting them from investing anyway in government securities. So I request that we also run those two polls before we get in the gesture of the discussion this morning. So we give it another 1 second, then we get the results and get to understand if we have any members in the audience that are actually doing government securities as a way of investment. Please kindly end the poll so that we get the results. Okay, so 15% are saying yes, they have invested in government securities, and 85% are saying no. So we have a big role to play on that, to let the audience understand the need, if there is any need anyway, to invest in these government securities. And what is limiting people? Most people don't understand. 51%, I don't understand. We asked whether they have insufficient funds to invest, and 25% are saying yes, they feel they have insufficient funds to invest in these government securities. Then some people, 4%, think government securities are for the rich. And then the 13% are saying, we believe the returns on the investment are so low. So we need to also get to understand whether it's a fact or no. Yeah, so that's what we got in the poll questions. I hand over to the panelists of the day to take us through whether it's a myth, whether we can actually invest in these government securities. Thank you so much.
Thank you, Jackie. Very telling results there. I think we are with the right group of people to help us understand and also demystify any biases that we may have had about government securities. So, like I mentioned earlier, the objective of our discussion today is to equip you with information and knowledge that will enable you invest in your money in instruments that work for you even when you're asleep. I think that's very exciting. So to start us off, Stephen and Roslyn are going to take us through a brief presentation about government securities. So please open up your ears and feel free to keep asking and engaging with us in your Q&A and your text box or your chat box, and we look forward to hearing from you. Stephen, you're most welcome.
Thank you, Salma. Hello, everyone who has joined us on the webinar this morning. The results from the poll are very interesting, so we're hoping by the time we're done with the session, the 51% who have not heard about the government securities, that number hopefully will have reduced significantly. So myself and my colleague will try to break down the basics really of the government securities, how to invest in them, and and who can invest in them, and what you earn, and so on. So we will start off with a brief PowerPoint presentation. It shouldn't take us long. We hope this session can be as interactive as possible, so we'll spend more time on the Q&A. But we'll start with a brief PowerPoint presentation. So, sorry, just a second for the PowerPoint to come up on the screen. Okay, in the meantime, so people usually ask what are government securities. When you introduce government securities to people as an alternative investment avenue, the next question most likely is going to be, what are they? So government securities are basically government debt instruments. So basically, these are instruments that government uses to borrow. So governments all over the world do borrow as well, whether it's the United States, the UK, world over. And they borrow to fund daily operations as well as infrastructure projects. So when the budget is read, part of it is financed by revenue collections. The other part is financed by borrowing. So it's not unique to Uganda. Countries world over fund their budgets this way. So government securities are instruments basically that the government uses to borrow, and we'll look at the different people who can invest in them in the subsequent slides. So one of the roles of Bank of Uganda is to issue these government securities on behalf of the government. So we do raise this funding on behalf of government. So the instruments that we use are broken down into two. We have Treasury Bills. So Treasury Bills are basically instruments that have a maturity of 1 year and less. So currently we have the tenors that we have are 3 months, 6 months, and 1 year. And then we have Treasury Bonds. So Treasury Bonds are the longer securities, more than 1 year. And right now we have 2 years, 3 years, 5 years, 10 years, 15 years, and recently a 20-year bond was introduced. Next slide, please. Okay, so I already mentioned that as Bank of Uganda, we are the agent for government, so we do raise money on behalf of government. And it's the investing public, basically, who lend to government. And my colleague will show us how the modalities are, how the procedure is for someone who is looking to invest in this government securities. Basically, someone looking to lend to government. So, so governments do borrow, like we've seen, from 3 months to the longest period, which is 20 years, with the guarantee that they repay the amount you've invested initially. And with the payment for lending to government, you will get interest payment, as we will see, for your investment. Okay, I've already spoken to this slide, the different maturities that are offered for government securities. We can look at the next slide, please. Okay, at this point, I'll hand it over to my colleague, Roslyn, to take us through the modalities of investing in the government securities.
Thank you very much. I think what Stephen has talked about, I'm just going to be brief about it so that we can understand it properly. As you've been told, the government securities, they are there. Government is borrowing money from us, the public. And you need to know about the history is that it started way back in 1969. So you can see it has been there. But it's unfortunate that we have like 50% who haven't really known about it. We have when we talk about the types of government securities, as he said, we have a short term, and when we talk of a short term, we call it Treasury Bills. The Treasury every after 14 days, if you want to access them. Every 14 days, you access Treasury Bills, but we have primary dealers in commercial banks, you have them 24/7. So you can access them through the primary dealer in which are commercial banks. And we have primary, there are 7 primary dealers. Namely Barclays, Baroda, Stanbic, Standard Chartered Bank, Centenary, UBA, Housing Finance, name it. And these are 91 days, which is 3 months, 182 days, those are 6 months, 364 days, those are 1 year. So the Treasury Bills are short term in terms of 3 months, 6 months, and 1 year. As he has informed us earlier, we also have a Treasury bond, which are longer. These are 2 years, 3, 5, 10, and 15 years. Then how do we access? How do we access? You either have to access these government securities through a primary market auctions, which I've told you, which is there every 14 days, or 28 days if it's a bond. That is once a month, and in every fortnight we have a bill. And if not, we get it from a secondary market, as I had told you earlier. Then how do you operate? How do we start the investments? First of all, you must have an account in a commercial bank. It can be any commercial bank, whether it's a secondary market or not. You open up an account, maybe you already have one for your business, for your salary, for your investments, whatever you have, whatever account you have, as long as it's in local currency, not a foreign account. You are going to approach your account, you are approaching your bank, and you tell them, I want to open up a CSD account, which is a Central Securities Depository account. They give you a form, you fill it, and then you leave it with your bank. This form, you can also find it on Bank of Uganda website. You can pick it from your commercial bank. You can even go to Bank of Uganda and you pick it. Whatever is easier for you. You fill it, then you give it your commercial bank, and you go. Within 2 days, less than 2 days, your account will be ready, and you start investing. So your bank is going to retain your form. When you are opening up an account, we have a form we called account opening form. and you must place your passport photo, and the account is free. You are not even charged 1 shilling. Then you move away. Within 2 days, you come and start operating your business. Then there is a form you have to fill, and you leave it with your commercial bank and go away. Business starts. Then how do you invest? When you are investing, I told you can either invest through a primary market, that those are auctions when you are doing auctions at Bank of Uganda, but you must use your commercial bank. Then, and again, you can invest through a secondary market. When you are investing, you must find out a calendar which is on the website. On the website, there is a calendar telling us when we are buying what and what time we are buying what. Having seen that calendar, you go to your commercial bank where we opened up a CSD account. You fill in a bid application form. The commercial bank will help you to do that. Then you just move out of your commercial bank, go your way. Your money will be invested and kept for the period you are interested in, either 3 months, 1 year, or 6 months, depending on an individual's interest. Then you go. If you find that the commercial banks, the primary market we've already bought, that you can ask the commercial banks to buy for you, and that is a secondary market. Now, how to invest? When you are investing, we don't need only big people or rich people or people with big money, big chunk of money. Anyone can invest as low as 100,000 Uganda shillings up to 200 million. So, first of all, when we're investing, you must invest in 2 categories. The first one is a competitor, and the second one is a non-competitor. What do we mean? When we talk of competitive, we are looking at somebody who has above 200 million, you go into the group of competitive. Now, if you have 100,000 to 200 million, whether 1 million, 200,000, 500, to 2 million, all those are under non-competitive. So you can buy as well. So what else, who can buy? Who are the customers? Our customers are very many. The commercial banks are also our customers. We have insurance companies. We have private companies, government agencies, pension funds. We have individuals who are 18 and above. But in case you have a child or you have a person who is below 18, but you feel you want to buy for that person, you can buy as a trust account. You have a trust account, you buy. We even have foreigners who are buying. We have individuals, we have corporates, name it. You have a circle, we can be here and make a group of family. Whoever is able can buy. Now, what are some of the advantages? Before we go there, let's talk about the advantages, some of the advantages. These government securities, they have very, very good competitive rate, even though they attract a withholding tax of 20%. But if you are buying 10 years, 15 years, or 20, anything above 10 and above, the withholding tax will be 10%. And this withholding tax is not on the whole money. It is on the interest that you are going to be paid. That's the very good thing of it. So there is no loss of money. You never lose your money. Whether you have put your money and you have gone away, so there is minimal credit risk. Your money is safe. It is ever there. But still, you must follow up your investments. You don't have, when it has matured at Bank of Uganda, we send it on your account. So if you don't follow it up to see what is happening to it, your money will be seated at your account doing nothing. So you are not making profit at all. You made the profit for the period you've asked for. Maybe it's 1 year, for example. After that, if you don't follow it, it remains on your account. So you better follow up your investment. In Uganda, most of us, the saving culture is very minimal. So these government securities give us a chance of saving our little money. As we are saving it, it is being invested. So it is a saving and an investment mechanism. Our security can be used as a collateral for borrowing in any Bank of Uganda supervised institution. What do we mean? If you have bought your security, you want a loan, you can go to any institution, they give you a loan. You don't have to go and look for land titles, look for people to come and sign for you. Just get a loan and walk out of the bank with your cash. Another benefit, these government securities are as good as cash. Let me assume I have like my 10 million on my account I've invested, and I have fallen sick in the hospital. I need some 2 million to rescue me. What do? You go to the bank, you tell them, I have my 10 million, but I needed 2 million to help me. The bank will give you your 2 million and will leave the other 8 million moving to maturity. So this is as good. You do it to your primary market. You don't do it anywhere else. You go to the primary market. But if you can understand with some other person who understands the investment, you can exchange. So these government securities are as good as cash. There are so many advantages we can talk about without ending, but it will all depend on an individual. Before I go, before I go very far, may I give you an example of those people who have invested in these government securities and they have really benefited. One, once you have an account, a CSD account, every time you get something and there is an auction, you can buy. But you can also buy through a primary dealer, as we told you. I want to tell you a living example of one time we received 6 gentlemen. I'm sorry, I will use their example because we requested them and they allowed us to use their example. These were students from Makerere. I will not say their names. They came at Bank of Uganda. Those days, they filled in their form. They went away with 100,000 Uganda shillings. The next week, those days would buy every week. They brought in another 10 million. With time, they finished their studies. They got employment. So they increased on the investment they were doing. So I think before we went for COVID-19 holiday, the breakdown there, 2020, they came. Someone said, oh, may I have my statement? We said yes, we looked for the statement. When I looked at the statement, it had 600 million. They said, oh, this is good discipline. You have managed to keep your money up this time. Said, yes, we did, but you know we are 6, one of us left us. And it is not only this money that we have. When we got employment, we increased on our investment. So we raised a lot of money and we bought land somewhere, a big chunk of land, which we have divided amongst 5 of us. And 3 of us have constructed buildings, our houses, we are staying there. And we used this money, which we started with here. You can see that example. They started with 100,000. With the discipline, they kept investing. Their investment increased. And at long last, at the end of it, they bought land, they constructed building, they have married. Now, that is a very good example. I always admire them. And they still have investments of about 600 million. And by the time we talked, they had bought, had a very big interest. Every 6 months, there was something going on the account. Because for the treasury bond, when you buy a treasury bond, the interest you get, we pay it to you twice a year. Every 6 months, we give you half of your interest. Another 6 months, half of their interest. So I think, my colleague, you can talk about, you add on how this interest is earned. You can go back on the chart.
Thank you very much, Rosalind, for that elaborate presentation. So I'll just supplement a few. Rosalind talked about the primary market and the secondary market. So the secondary market, like she mentioned, we have what we call primary dealers. These are banks that were selected on a certain criteria by the Bank of Uganda. There are currently 7. So when we say primary market, when Bank of Uganda issues an invitation to tender, basically a statement in the media announcing an auction, these 7 banks are the ones that participate in that auction directly with Bank of Uganda. So we call that the primary market. But then, so what do I do if I'm an individual and I want to buy these securities and I've not participated in the primary market? So then we have what we call the secondary market, which is where you can buy